Thanks for tuning into the Trade Setup. I'm Neeraj Shah. Apologies, we are a couple of minutes late, but let's get started. First, the global news flow. ECB hiked rates by 50 basis points on Thursday. Meta and Alphabet have been knocked down after Snap's quote-unquote awful results. Snap, in fact, was down maybe over 20% in post-trading hours. So that's kind of had an impact on the NASDAQ too, by the way, NASDAQ futures, that is. Oil slumped on gasoline stockpiles, rate hikes, and resuming supply issues. And as per PTI, as per a FICCI survey, India's GDP is likely to go 7% in the current fiscal. Now, that's the news flow. What did the markets do? Well, the US markets did it okay. I mean, the overnight performance was okay. So 1.36% for the NASDAQ, 1% for the S&P. But the NASDAQ futures are down, so keep that at the back of your mind. It might have a bit of a bearing on our markets too. The other cues, the 10-year yield came off in the US. So that one is 2.89. Bitcoin steady, dollar index steady, so no great shakes there. The SGX Nifty indicating a flattish start, I reckon, so no great shakes there too, about 20 odd points, but no red, which is not a bad sign. Now, I mean, frankly, if you just think of the trade setup, I think a respite from FI selling predominantly and positive global traction is aiding the sentiment. 4 days in this week, and we've had 4 positive numbers from the FI. So there is a bit of a respite out there. Though technical experts are now warning about a possibility of a turn in the trend being around the corner. Yesterday on Twitter Spaces, when we spoke to Sikinara and Rajat Bose, I read a couple of notes that have come in overnight in our inboxes as well. And all of them are talking of between the 16,600 to 16,800 band is where they believe an intermediate trading top of sorts, a bit of a pullback possible. I have no idea whether that happens or not, but I'm bringing you the opinion of some of the better technical minds. I mean, there are a bunch of them out there. Some of you might be looking at charts very closely too. Do tell us if you believe otherwise in the comment section wherever you're seeing this. But at least that's something that I hear from experts. Mid-cap tech results, you could argue some of them are subpar. Persistent is an exception to the rule. So you could argue that maybe Emphasis had fairly decent order inflow wins. Cyient had its own benefits too, but I would suspect that today there would be a first amongst equals performance from Persistent vis-a-vis the others. FI's net bought about 1799 crores worth of shares. DI's net sold about 312. So the buying from the FI community continues unabated. And I use the term unabated with purpose. I know it's only 4 days and it may change very, very strongly, but 4 days of continuous FI buying, you could almost argue is unheard of, isn't it? We just haven't seen that happening in many weeks or many months, if you will. So it's a bit of music to the ears for sure. Let's see if that changes. A bunch of results for today. I mean, Atul, Bandhan, Crompton Greaves Consumer, Gokaldas Exports, and the stock has had a fairly decent rally. HDFC Asset Management would be important, as would be JSW Steel and Ultratech, as well as Reliance post-market hours. So we have JSW and Ultratech, like Ultratech too likely during market hours, and then post-market hours Reliance. In fact, from a post-market hours perspective, I don't think we've had a more important weekend. These 4 come out post-market hours today and before Monday market open. Therefore, 30% of the Nifty weightage comes out post-market hours today and before market opens. Now, what these 4 do could well have a bearing on what the index does, right, on Monday morning. You probably expect that the banking names which come out tomorrow, which is ICICI Bank and Kotak, might do okay. Reliance is a bit of an unknown entity with GRMs all over the place, but largely stable during the April to June quarter. And Infosys, anybody's guess, right? The large cap IT names, all of them without exception, have not had a great run. TCS, HCL Tech, and Wipro, all 3 have kind of turned out a patchy performance. A commentary too mixed as well. It'll be interesting to see if Infosys does the same or not. So, but IT is in a bit of a rebound as well. So let's see. Monday morning could be very, very interesting. Be careful about overnight trading positions on the indices per se. What about stocks that would be active in the session today? A bunch of names, results, and otherwise. To my mind, the stock of the day is Persistent Systems. Look at that dollar revenue growth, 11% QOQ. Even revenues per se in constant currency, the rupee terms, 14.7% rupee revenue uptick at 1878 crores. That is stellar by any stretch of imagination. EBIT up 16%, EBIT margin just about steady at 14.3%. PAT not as strong. There were some one-offs, but 211 crores versus 201. Essentially, the revenue growth. I think the deal signings looked okay too. From what little I read, the numbers came really late in the night, but I think they looked okay. Persistent systems, and therefore that's actually the good sign. Now, let me just they've added, I think, 3,000 employees, and the TCV booking of 394 million was the highest ever. It almost seems as if one or two of these mid-cap names might are working on a different planet. The only caveat that I would give your viewers is that, remember, the problem, I mean, we haven't heard from Persistent as yet, and we'll be talking to the management today, so you might want to tune in for that. The problem that happened with Mindtree was that Mindtree was not, or rather Mindtree came out and said that while this quarter was strong and next quarter is good, they don't have visibility for Q3 and Q4, and they sounded cautious. And I presume that is why Mindtree, which also came in during the point of time when the IT sentiment wasn't the best, actually cracked about 3-4% after results, after giving what I thought were fairly strong results. In case of Persistent, actually the numbers are slightly better than Mindtree as well. Different models too, of course. And the commentary might be okay. So a lot would depend on their commentary. We'll be, of course, getting into management, like I said, I think at 10:30 a.m. today, if I'm not wrong, 9:30 or 10:30 a.m. today. But yeah, that commentary would be important too. But standalone, ceteris paribus, I would think Persistent Systems, robust quarter, would be an interesting one to watch. JSW Energy came out with a decent quarter, I thought. Revenue from operations at 3026 crores. The estimates were about 2252 crores, so much higher than estimate on the revenue front. 1022 crores EBITDA versus the estimate of 875, much higher than the EBITDA estimates than the Bloomberg estimates too. And net profit at 554, the Bloomberg estimates were 404 crores, so much higher than estimate out there as well. So JSW Energy are doing okay. Canfin Homes, NI up 38%, net profit up 48%. Decent numbers. I thought PAT growth was aided by better margins as well as the provision write back. So keep that in mind, which is why PAT growth is so strong compared to the NI growth. But nevertheless, the 38% NI growth too is pretty strong. So Canfin Homes, interesting one. Remember, the provision write back was, as I said, the key thing out there. The asset quality improved too. I think the GNPA was about 0.65, net NPA 0.3. Asset quality remained strong. CAR remained at 24%. So all in all, can't find too many faults with Canfin in the session. MPHASIS, you would argue a mixed bag, but largely doing okay. So revenue is up 4.1% at 3411 crores versus 3277 crores QOQ. Dollar revenue was up about 1.2. EBIT margin 15.3% versus 15.2%, and PAT up 2.5% at 401.9 versus 392. The thing about MPHASIS was that while the headline numbers looked okay, the deal wins were strong, and which is why I thought the MPHASIS note would probably do justice. So they were an overweight rating with the target price of 2430. They're saying that 2% constant currency growth was below the estimates of 3%, but the new deal wins at 302 remains strong with an 84% contribution from new generation services. Typically, these would have better margins and will not probably crack too much in the event of a recessionary outlook in the US, presumably. The net billable employee addition quarter on quarter was a bit soft as per MS with 941 versus the past few quarter trends. So that remained a bit of a issue, if you will. But net, the deal wins were strong. The performance not as strong as a Persistent, and therefore could that be a cloud for MPHASIS? Let's wait and watch. Cyient, the other one, which came out with numbers which were largely in line with estimates, pales compared to what a Persistent did. But remember, Cyient is not a how do I say, an IT services company. It's an ERD company versus slightly different. EBIT margins were okay. FY23 revenue guidance was unchanged, which actually indicates probably a strong turnaround in their business. And the EBIT margin guidance is unchanged as well, which means that they expect a strong pull-up in margins ahead. So you would argue that in Cyient's case, the numbers were weakish, but the commentary looked okay. Maybe Cyient has a decent day as well on the back of that. Let's wait and watch. India Mart may not have a good day. Standalone numbers, revenues up 24%, but EBITDA lower, EBITDA margin lower, net profit down 47%. And I think compared to estimates too, these numbers paled a little bit. So maybe India Mart has a dull day today. Let's wait and watch. ICICI compared to an Angel, compared to a 5paisa, certainly a dull quarter. Revenues, okay, 793 crores. EBITDA margin though, and the EBITDA margin is on guided line. They look at the cost to income ratio and they said that the cost to income ratio will move higher. So EBITDA margin naturally would move lower. Net income actually lower than the corresponding quarter last year. So ISEC left a bit to be desired. May have reaction. I think I'd read a Nomura or UBS note on ICICI Securities, which had downgraded the stock to a sell. But I must mention that compared to a bunch of others, the brokerage stocks have corrected quite a bit as well. Angel Broking had hit 1900, currently whatever price it is at. ICICI Securities maybe halved, or if not halved, has lost quite a bit, from its highs. So some of these brokerage stocks have corrected quite a bit already. So please keep that at the back of your mind. But certainly, ISEC not the best of numbers. Then some companies which have come out with news. So Indoco, there was a US FDA inspection, and they say that the US FDA has concluded the inspection with no observations found at the CRO plant, and and this could be construed positively. Biocon, they've reserved the comments. We don't know the nature of the observations, but US FDA concluded a pre-approval inspection of the Hyderabad unit site 3 with 3 observations. NLC India, it's a 10,000 crore market cap. They've approved lignite mining and thermal power expansion projects worth about 15,000 crore rupees at 2 sites, 15,000 crores total expansion. Quick Heal, the board has approved 150 crore buyback at 300 rupees per share via the tender route. And Deepak Nitrite, because I read a brokerage note which said that phenol acetone players in Asia have cut operating rates. Could it reflect in the kind of operating performance or the operating rate for Deepak Nitrite as well? This is not great news. Maybe the stock reacts negatively. If it does, you should know why. There are twin forces at play out here for Deepak Nitrite. EU plants not getting gas should be positive for the Indian plants, but Asia-wide, everybody's cut their operating rates, especially in the phenol acetone segment where Deepak Nitrite is the leader. Maybe that has a negative reaction today. Lastly, what stood out for me before we wrap up is a Bloomberg story which says that US-based GQG Partners has more than $7 billion invested in India, and they're continuing to stay invested because they are betting that India is the best position amongst emerging nations to withstand a global recession. That, to my mind, viewers, is music to the ears. Anyway, so that's the long and short of the trade setup today. A bunch of IT names, some other stocks in news in mid-cap pharma, all of which could be active. But I dare say, for this time around, the weekend, for a change, the weekend might be more important from a market direction perspective on Monday than what the trading day of Friday could be, despite the fact that it's got a bunch of very important numbers, including Ultratech and JSW Steel. Just that from a weightage perspective, the weekend is far more important. Be careful with carrying your positions over the weekend. You never know what Monday morning could have in store. Thanks so much for tuning in. Have a safe Friday ahead and have a great weekend.